if you check your bias, you see that whenever price gets here, it's sold. So we know that, okay, this is a zone that sellers are more. So the thing is that I don't advise people to marry any particular time frame, and I don't advise them to marry any particular position, because market is indecisive. You understand? It can decide to do anything it decides, and there's nothing that we can do about it. So what I want to do is that you just have to keep your mind open and be open to suggestions. You understand? Don't always think it's gonna go like this, because you are not the one controlling the market. But you just have to have strong confidence to guide your decision, to guide your entry, and that's just all you need, and you'll be fine. Okay, and your risk management too. Those are other things that you have to do. Those are things you're gonna work on. So this is technical analysis. This is how I analyze gold. This is how I trade gold, on a week-to-week basis. Usually I don't trade on Mondays, because that's when the market takes to use that's when it uses to do its direction and all this other stuff. You understand? So me, that's what I do when I come on Monday. I make my positions, and then I wait for market to do its thing. When I get a clear direction of where the market is going, so then I enter, because then I have a clearer risk to reward ratio. So we are expecting a rejection, because my entry is gold move from zone to zone, and then my entry is actually on the rejection, because the pips are kind of lower, and then you might be risking 15 pip stop loss, 12 pip stop loss. Your stop loss might not even get hit. So that's what we're just gonna do. We're gonna be patient, and then we're gonna see if we see prices rejecting, but it doesn't mean that this is a sell. It doesn't mean that this is a sell. Okay, it doesn't mean that this is a sell. If you notice, there's another liquidity area outside here. So price can choose to come and reject off this liquidity area here now. This liquidity area here now. So we are just so that's what we're gonna do. Uh uh okay. If you're with me, drop number one on the chart, drop number one on the charts, drop number one on the charts, drop number one on the chart, drop number one on the charts. All right, thank you, thank you, thank you, thank you, thank you. All right. So that's what we have for today. And this week, well, we're gonna be expecting more sales from gold. Uh so that's how we're gonna do it this week, and more pips and more blessings to each and every one of us as we analyze the market. So don't forget, you can make use of this strategy at home. You can you can trade any pair you want to trade. If you check my chart, you see that I have Euro USD, I have Euro USD. I have Euro USD chart, same strategy, no much explanation, same strategy. If you can see, we see a rejection here, we're coming down, we're gonna wait to buy over this level here, or off the see, you see where the price closed, the blue line, check, that's just what happens. Okay, the market always respects this place. It finds rest when it's this place. It feels like I'm safe whenever I'm here. So, that's how the market works, and that's how I make use of my psychological lines. So don't forget, I have three main psychological lines. I have the main psychological line, I have the mean, and then uh I have the micro psychological lines, which is the mean. You can still call the micro psychological lines the sub psychological lines. So main, sub, and micro. That's just how it is. That's just how it is. That's how it is. So so that's basically how I trade gold. That's how I trade gold with trend lines and trend line break and everything. So and there's something I have to really say really quick about gold. Gold is a CFD, and it tends to be manipulated sometimes. So you have to be very careful, because that's why I trade it from zone to zone. You understand? Because that's where I can be sure of. You see, if you see these movements now, you see it's choppy. But if it's other pairs, you see them, they just move directly to where you want them to go. But you see gold, it first come down, clear your stop loss before it start going up. So you have to understand that thing before you start coming to trade gold. You have to understand that this is how it moves from zone to zone. Now is in another zone. I have to open this gold chart back so you guys can really understand what I'm saying. All right. So as you can see, this is where we are now. So when market opens tomorrow, we might see some buys, I gotta do this so you guys can understand what's really going on. You understand? Um, okay, yeah, I got this. This is it here. So we might see some buys to this zone. And why is this going to hold? Because it is the previous high of the week. And don't forget, whenever price comes, those that were in my class, my previous class, don't forget that whenever price comes to one of these zones, there's always a shock. There's always a shock. It's like a huge barrier to the markets. You get it's like a closed door, and then you came and just meet the door because it's on the previous week. So you just come and meet that point of rejection. You understand? If you come here on the previous week, the price was rejected here. So whenever price goes there, it will also have the feeling of that rejection. The sellers are still going to push the market down. So that's what just happened here. So now we are here. So I experienced some kind of buy either to this zone here or to this liquidity area, which is outside this zone here. And then we're going to pull back. We're going to pull back. We're going to start going down. We're gonna start going down. We're gonna start going down. So that's what I'm saying. So in case of the fake out, you guys have to be careful tomorrow when trading because of fake outs. So if you can see, it broke this line, but if you can see, I'm still seeing the sell because it's on the area of liquidity, it's on the sell zone. So yeah, that's it. That's just basically how it works. So when the market opens tomorrow, look for a direction and then you take your trades and relax. And don't always be trading in a London session because it's kind of very, 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 very crazy in London session. Gold doesn't move then. And then there's also something I have to make clear for everyone in this lecture today. When trading gold, there's something I have to this is a bonus. So if you stay till the end, this is a bonus for you. This is a bonus for you. So this is the DX. This is the DXY, okay? This is the dollar currency index. So what happens with the dollar currency index? What happens is that anytime this is going in a direction, gold will always be going in a different direction because you see they are correlated differently. So people have a word for it. It's called price correlation. It's called price correlation, which is the different exchange rates between different price. So now dollar is the quote currency when it comes to USD, XAUSD. Dollar is the quote currency. So which means you're gonna be selling your dollar to buy gold. So if you're selling your dollar to buy gold, which means that whenever this dollar is selling, gold is gonna be buying. And what does that mean? Whenever gold is buying, the dollar is gonna be selling. So that's price correlation. You can also use that in your confirmation when you want to confirm your entries. So that's it for today's class, and see you this week. More pips, more free signals to you guys. I'll be sending few signals this week to the channel. So if you don't have the channel, just go to our Instagram. Just go to our Instagram page and join our free Telegram channel. It's free. And see you in class next time. And happy catching peeps this week. If you want to take a screenshot of the chat, you can. If you don't understand more, you can just text me. I'm on Snapchat. Just text me on Snapchat, and then we can go from there. Yeah, and please, to be very, very, very clear, I do not charge for signals. I do not charge anybody for signals. I'm not charging anybody for signals. So my signals are completely free. You go there, if you see signals, and please trade what you can risk to lose, okay? Trade what you can risk, okay? So that's it for this week's class, and see you next time. All right, bye.